Hello everyone, welcome to Spark Hansraj's newest initiative, the 2022 Budget Analysis, where we'll be doing an in-depth analysis of this year's annual budget.
Here we have with us Mr. Nilesh Patel. He is a CPA, USA, ex-Deloitte, as well as a former IRS officer. Thank you so much, sir, for joining us today. We are very glad to have us on board with us.
Thank you, Elisa. Thank you, Meera. Thank you, Anmol. It is really nice to meet you young students, shaping up their bright future and crafting their upcoming lives. As far as this budget is concerned, I feel on the tax front, the budget is positive, favoring the taxpayers. Of course, there are a few negative points also, but they are not many and only have minor effect. If I have to give you a brief overview of the tax proposals of the budget, then I will say this. I will divide it into 6 or 7 sections. First one is promoting voluntary compliance. As you might be knowing, the budget has provided the taxpayers a choice to file updated tax return in case the taxpayer notices something wrong, some omission, or has missed out to report any income in the original return. This is promotion of voluntary compliance. Next, I would say reducing litigation. Third, supporting startups, manufacturing units, and International Finance Service Center. Fourth will be mobilizing tax revenue. Fifth will be widening and deepening the tax base. Sixth, I would say, rationalizing certain tax measures. Seventh is withdrawing certain tax exemptions. So briefly, I see the budget providing measures in these 7 sections or 7 areas on the tax front. That is how I will briefly sum up the tax proposals of the budget.
So let's move on to the next question then. Income tax slabs is unchanged. Taxpayer can file returns in 2 years. Although the expectation with budget this year were of providing relief in income tax, has been no change in the income tax slab. How do you think this will impact the middle class?
Yeah, that is a good question. A lot of people, especially from the middle class, were hoping that some relief will be provided from tax. However, if you see the slab rates, up to 2.5 lakh, it is exempt, no taxes to be paid. For income from 2.5 lakh to 5 lakh, the tax rate is only 5%. So if you earn 5 lakhs, you have to pay only 25,000 tax in the whole year against 5 lakhs income. After that, we have tax slab rates going on, and the highest tax rate of 30% is applicable only to those people who earn more than 15 lakhs. So overall, if you compare this to other countries in the world, these tax rates are comparable. They are not excessive. They are comparable. And if you see people earning 2.5 lakhs, which roughly comes to about 20,000 rupees per month, many such people are there in India, and they don't have to pay any tax. That is one thing. Of course, because of COVID pandemic, people have suffered a lot, have incurred a lot of medical expenditure. And so I feel that relief could have given by increasing the standard deduction, which currently is at rupees 50,000. It could have been increased to 65,000. As far as the facility of filing updated tax return up to 2 years from the end of assessment year is concerned, it is a voluntary choice given to taxpayers. If the taxpayers feel they have to take that choice because they have missed out reporting some income in the original tax return, they have the facility to file updated tax return. Of course, this is not free of cost choice. The taxpayer still has to pay additional income tax of 25% if the updated tax return is filed within 1 year from the end of assessment year. And if it is filed after 1 year, but within 2 years, then additional tax is 50%. So on one hand, no substantial relief is given, but a choice is given to taxpayers with a cost of additional tax.
Yes, sir, that's an interesting way to look at it. Thank you for that insight. So, sir, moving on to the next question. The RBI has announced a tax on digital currency as well as cryptocurrency. So, could you elaborate a little in the future?
That is an interesting question because cryptocurrencies like Bitcoin, Ethereum, Dogecoin are now all around us. And we were expecting that some proposals will be enacted to tax the budget. Of course, the regulatory framework is yet to be put in place. Now, you have to distinguish between currency and asset. Digital currency, digital Indian rupee, which will be floated sometime next year, that is currency. An asset, virtual digital asset, which in this budget has been defined as cryptocurrencies, non-fungible tokens like NFTs. So on one hand, we have digital assets, which mistakenly we call currencies, cryptocurrencies. I would call them as crypto assets or digital assets on one hand. On the other hand, there is a digital currency which will come floated by the government and put in place by the RBI next year. That is one. Second, if you look at these digital assets, crypto assets, Bitcoins, Ethereum, Dogecoin, etc., government says that if you want to invest, go ahead, invest. We have nothing against that because these are not harmful assets like narcotic drugs, like weapons. So these are not harmful to the society at large. So at your own risk, peril, and also profits and gains, if you want, you may invest. However, please pay tax. Of course, the tax rates are quite high because the government feels that these crypto assets lead to elimination of intermediaries like RBI, and government doesn't want to encourage that. One. Second, if you know that Bitcoins are mined by using a lot of electrical power, and that is not friendly to the environment. So government doesn't want to encourage that, and therefore the tax rates are quite high. That is what is my understanding.
So, sir, the next question will be, the minimum alternate tax for corporators has been cut. It used to be 18.5% and now down to 15%. The surcharge on corporate tax has dropped as well from 12% to 7%. Can you talk a little bit about what this tax is and what is the goal of the government over here? And how will the corporations benefit from this?
Yeah, regarding lowering of minimum alternate tax for cooperative societies, the finance minister in her speech itself said that minimum alternate tax on cooperative societies is being lowered from 18.5% to 15% so that these societies can be brought at par with companies, because companies today have to pay minimum alternate tax rate at 15%. That is the only objective, to bring societies and companies at par. Regarding reducing of surcharge, this will not have much of effect because surcharges, let me explain this. What is a surcharge? Say your income is 100, your tax rate is 30, your income tax comes to 30. Let us say your surcharge is 10%. So that is 10% of 30, which is only 3. It is not 10% of 100. So lowering of surcharge little bit here and there will make 3 to 2 or make 3 to 4. It is not a substantial kind of a reduction in tax. One thing. Second thing I would like to say about surcharges is levied because that entire proceeds of surcharge go only to the account of union government under the Consolidated Fund of India, meaning that whatever revenue is generated by way of surcharge, the central government does not have to share that revenue with states.
Thank you, sir. That's an important distinction to make, I think. Yes, sir. Continue.
I would also like to say something about minimum alternate tax. There are two terms. One is called MAT, M-A-T, minimum alternate tax. Other is AMT, alternative minimum tax. Only one word is shifted here and there. It is very simple distinction. MAT is applicable to companies, while AMT is applicable to non-companies like societies, LLPs, individuals, HUFs, etc. Concept is the same. If you claim a lot of deductions, exemptions, high depreciation under the Companies Act, and your book profits are very low, and your normal tax computation, I would say normal tax income is very low because you are claiming very high depreciation and lot of deduction and exemptions, while your book profit is high. In that case, you have to pay tax on book profit under MAT provisions or AMT provisions, so that you don't get away with claiming very high deductions under the normal provisions of the Act. At least you pay some tax under MAT provisions if you don't have to pay any tax under the regular provisions. That is the MAT provision.
Moving on to the next question. Some people have expressed concerns that this is a fiscally conservative budget where the expenditure is being compressed while there is a very significant capital outlay expenditure that necessarily will not get spent in this financial year and would perhaps spill over in the next year. So what do you think about this?
Yeah, let us see the figures of expenditure and revenue proposed by the finance minister in the budget. The total expenditure of the government will be 39 lakh crores. That is not a small amount. There is no compression there. Against that, the revenue will be about 29 lakh crores. So there will be a deficit of about 10 lakh crores, which comes to 6.2% of GDP. So in my understanding, there is no compression of expenditure by the government. And the increase in outlay of capital expenditure of the government is adequately supported by tax revenues because the tax collections have been quite buoyant in the last year. As is clear from the economic survey, the government has collected about 15.5 lakh crores from direct tax as well as indirect tax. As against that, what is the capital expenditure outlay for the next year? It's only 7.5 lakh crores. The tax revenues are enough to meet that expenditure. If you look at the numbers.
So my next question would be, as far as widening the tax base is concerned, there have been many measures to simplify the collection of tax by making the process simpler. Were you convinced by the announcements made by the FM? Should there be more announcements to simplify the collections of tax to ensure that the numbers goes up?
Well, I think there are two parts in your question. One is simplifying collection of tax linked with widening of tax base. In my experience, the collection mechanism for tax which we currently have is working quite well because most of the tax is collected by way of TDS, tax deduction at source. So when someone makes any payment to somebody else, the person making the payment has to deduct tax. And after deducting the tax, has to pay only the remaining balance amount to the receiver. So that is the main collection mechanism, and that is quite simple, well understood, is in place for many, many years. Now the question is how to widen the tax base further. So in my understanding, we have quite simple tax collection mechanism in the form of TDS, in the form of filing advance tax, self-assessment tax, etc. And that mechanism of collection of tax will not lead to widening of tax base. They are not linked together. Widening of tax base will come only when people start earning more income. Because as I stated earlier, any person earning income less than 2.5 lakh crore is outside the tax net. If that person starts earning more income, then that person will come in the tax net. Of course, there are people who are earning more but are not paying enough taxes. We can call them tax evaders. But with digital technology, digitization of economy, digital payments, formalization of economy because of GST scheme and GST framework, slowly more and more taxpayers will come into the tax net, and that is how the tax base will be widened.
Do you think there is anything noteworthy in the direct tax proposals of this year's budget as compared to the previous years that the common public should look out for?
Common public should look out for. What is special in this year's budget? Common public, I include people who are paying tax, people who are doing small and medium businesses also there. So then I would say that this choice of filing updated tax return, we can call it something like voluntary disclosure of income scheme, which earlier we could avail of only when the government came out with such scheme. The last time the government came out with such scheme was in 2016. And before that, it was in 1997. But now that scheme is available to taxpayers under the Income Tax Act itself. So whenever the taxpayer wants to invoke that choice, the taxpayer can do so.